Hi, good people. Thank you for tuning into my channel. If you like the content, please like, subscribe, and turn on the post notification bell so you'll be notified when I post future content. I'll talk about all kind of crazy stuff on this channel. We talked about in previous videos how globalization works, how all of that's at risk of breaking down, right? And how manufacturing, even though companies are leaving and trying to bring things back home and back closer to their shores, that's going to take some time to grow. That's going to take some time to happen and relocate and contracts to be signed and things like that. So it'll take a long time. There'll be a gap, but it can be done, right? But it's all kind of crazy things going on in this world. And that's the interruption of globalization. That is trade. That's how companies make their money. That's how countries make their money. That's how whole economies exist, right? So if that's at jeopardy, the world will go crazy. But what I want to truly talk about today is, do you know who controls that money? Do you know who controls your money, your lifestyle? I mean, everything directly down to your household. How much money you making, how much money is out there, how much your job, the value of your job, all types of things. These are things that are determined by these groups of people, right? Well, they're the people that control our money. At least it starts here in the US, but it branches out to the rest of the globe, right? Now, that entity, those institutions would be the central banks, the Federal Reserve, right? The World Central Bank, and the United States Treasury, right? These are two totally different entities. One is federal government and one is the Fed. One public, one private. They are not one and the same, right? But these are the two groups that basically govern money all across the world. So, most people know who the United States Treasury is, right? Because the United States Treasury collect our taxes every year, make sure we pay Uncle Sam, right? That's how that's the number one way that the United States government makes their money. They make their money through taxing us, right? To pay for services and things like that across the country, building infrastructure, providing security and military across the world. That's what the taxes provide, right? But that's their way of making money. That's how the United States Treasury, they come in because the Treasury collects all of the money and then pays the United States government bills with that, i.e., the programs, the military budget, Social Security, Medicare, um, pension, payout bonds. United States Treasury bonds. That's another way the United States government makes its money, through the Treasury. The Treasury sell bonds. Now, United States Treasury bonds are one in uniqueness in itself, because this is like the second gravy train for the United States making money. They sell not only just us private United States citizens these bonds, our pension systems pay into these bonds, other countries, whole countries pay into these bonds. Japan, to the tune of one what is it, $1.7 trillion. Japan owns U.S. Treasuries. China is a close second, and I believe Germany is behind, or Switzerland. It's one of those countries. But these countries all invest, and it's not just, it don't stop there. We talking insurance companies. We talking, like I said, our pension systems. Everything is tied up in U.S. Treasuries, U.S. bonds. They're there. So that's one way the United States Treasury, well, the second way the United States Treasury collects money. Now, another little special way that they make money through the United States Treasury is they print money. They print our dollar bills that we carry in our wallet and our purses, right? They print those Federal Reserve notes and they issue them out to the public. But the way it's done is like this. So the United States Treasury, there's an act of Congress that happens first. So they go to the House of Representatives. They they argue for a bill to be drafted so that they could print money. They then decide, okay, the money, yes, we approve the money like they just recently did. And then that order then goes over to the United States, well, the Federal Reserve. The Federal Reserve, that private institution that controls the world money, is governed by like 9 of the top 1%, right? So they decide if the money gets printed. So then they approve the order or deny the order, but in most cases they approve it. It gets to the United States Treasury. They say, okay, order approved, boom, crank up the printers and go. But when they sell that money, they sell it to the banks. They sell it at face value, right? So when the banks buy it at face value, it costs 3 cents to print each bill. The banks pay face value. The United States Treasury collects a 97% profit on a dollar bill. And so with every dollar, well, let's say if they do a 20, they'll get $19.97 of profit that goes to the United States Treasury when they sell that $20 bill to the commercial banks like the Wells Fargo, the Chases, the Bank of Americas. When they get that note, that's the profit that they're paying to the United States Treasury. And $100, and they get more profit off a $100 bill note. It keeps going up that high. They'll get $99.97 for selling a $100 note to the bank. And all of that goes to the United States Treasury, and it helps fund the federal budget. That's how it works. Central banks, it's not just like I said in the United States. They're the ones that lead the pack. But central banks are everywhere, all across the globe. They hold whatever country that the central bank is in, they hold that currency in that central bank. They may hold gold in that central bank, but the bank that holds the most gold is the United States Federal Reserve. They hold a majority of the world's gold. And the United States dollar used to be backed by the gold, but it's no longer. But other countries felt real safe with the United States holding their gold and being the world reserve currency. Now, some say the biggest scam would be if all the countries, like how people could do bank runs when they don't trust the banks, countries could do central bank runs and ask for their gold. And if the central banks don't have the gold to produce to the countries, it's like y'all been lying to us the whole time, telling us y'all got the physical gold here, because it's physical gold. We not talking papers. We talking those bricks of gold. Yeah, because it's hard to transport that stuff over water and keep having that stuff shipped all over the place and risk it being lost over the waters. And so you just leave it in a safe vault in the New York Central Bank, the Federal Reserve, and just leave it there. But if they run down and say, give us our gold, the question is, the multi-trillion-dollar question is, will the gold be there? If it's not, that would be one of the world's biggest scandals. All countries would default. They'll realize all of that is not there. It's not there. And no countries are just coming over here looking in the section of the vault like, yeah, there's our physical gold right there. No, they trust the central banks that they say that they'll have it there. But that's how they play it. They trust the Federal Reserve with all of their currency. The Federal Reserve controls the interest rate, how much we pay on our mortgages, how much we pay on our cars, how much we pay on our credit cards, anything that's attached to debt with interest. The Federal Reserve directly controls that. They have to manipulate that from time to time to either accelerate or pull back the economy. Depends on how much growth or decline is happening at the time. But that's how central banks, that's the tool they have to play with. Like now, we got inflation running up. That's how they'll fight inflation, raising the interest rate. Now somebody who has a mortgage that they can afford if they got a fixed rate, right? They're cool. They're good, but they if they have an adjustable, that means trouble for them. Their rates are going to adjust to the higher rate and they will no longer afford that home, that car, that credit card bill, whatever's attached to the interest, right? But the Federal Reserve is behind the scenes playing with that. Stop, go, push, red light, green light. They back there playing with that. But that's the power and the control that they have. And they've been having it for a long time. And like I said, it don't stop here in America. These central banks are everywhere. The European Central Bank, the Bank of Russia, the Bank of China, the Bank of Japan. Now, the Bank of Japan, that central bank is crazy because Japan went through an economic crisis long before the United States ever had a trigger of an economic crisis. Long before 2008. We talking Japan been having problems since like the 80s. They started losing dominate power in the world, and you know, growth slowed down and they got older. So their central bank did what the United States did in 2008. They bailed out all of the failing banks. When that financial crisis was triggered and the housing market plummeted, they bailed out the banks, right? Well, that's called quantitative easing. And Japan started that. They started that long ago to help control their economy because the Japan central bank been printing money for the longest in their currency, the yen, but for the most part they've been printing it. And to the point where their central bank balance sheet is like 80 or 90% of the country's GDP. Basically meaning the country owns a majority of the debt in the country. They own a majority of the companies. So instead of letting the company fail, they'll absorb it, take it in on their balance sheet, and stop whatever would have happened if that company would have collapsed and caused a domino effect or caused the whole industry to go down, like the banks would have done in 2008 here in America. If if the United States Congress and Bush would have said no, we're not bailing out the banks. Although people here on Main Street we were pissed off, but if they didn't do it, I don't think most people understand what that would have meant. Letting the banks collapse, it would have happened earlier, but that would have been ugly. We're talking about people losing their pension, people losing everything. We're talking a whole economic shutdown, not a downturn, not an economic downturn. We're talking about a whole economic collapse, financial system collapse, everything done. I'm talking about Great Depression times 10. We got way more money floating around in the system than we did back in the 1929s and the 1930s. It's more companies on the United States Stock Exchange than it was back then. So that means a lot more companies, a lot more money, a lot more people are at risk. And there's way more people on the planet than it was in 1929 when all that happened. So this time around, a depression would be unthinkable. Unthinkable. But everything is headed that way. Everything is headed that way because they keep printing money. The central banks across the world keep manipulating currency and playing that money game to the point where debt is over leveraged in every country. And it's all going to come to an end at some point. The bubbles are going to start popping. What country is going to trigger it? Who knows? Throw a country up in the air. They all have a crisis going on right now. It's just folks like me and you are tuned into it, and we sit back with our popcorn and see what they're gonna do, what stories they gonna tell us, and how they gonna maneuver their way up out of all this stuff because it's ugly out there, and it's a domino effect across the world. Until next time.